Good afternoon, everyone. How you all doing? Hello, and I see a lot of you have turned up early, nice and early for this session. So thank you again for jumping on nice and early. Hey, Bob, how you doing? Hey, Moses. Moses asking about a Discord channel. I don't think we have a Discord channel, so I'm not. Also, you hear me now? Hello. All right, thanks for that. Hey, Moses. Good. Ellen threw me off there saying no sound. All righty. Good stuff. Hey, Zoran, how you doing? So as usual, if you are new to the session and you haven't been on any of these sessions before, let me know where you're joining me from. And I'm sure you guys can see my screen okay. So let me know where you're joining us from. Hey, Diana, how you doing? Hey, Marzena, a wet morning. Whereabouts are you? Hey, Luca, good to see you again. Fantastic. Hey, Samuel. Keep it coming, guys. Let me know where you're joining me from. Even for the regulars, hey. Today we are here with the IC Markets webinar on the trading strategy series, the Pitchfork trading strategies. So as well, while you're typing it in, letting me know where you're joining me from, let me know, do you use the Pitchfork trading or the Pitchfork indicator and the Pitchfork trading strategy? Never heard of it. Hey Desiree, how are you doing? It is quite an interesting indicator, quite an interesting strategy. I wouldn't really call it a strategy per se, but quite an interesting indicator. So I'll be sharing more about that with you. Marzena says, I've tried this, but deciding which points to use was subjective. It's very subjective. That's one of the things I'll highlight as well. Hey Bob, used it a long time ago. Great stuff. Steven's never used it. Hey BL, thanks for all the follows and all the comments. Really appreciate that. Hey Simon, how are you doing? Good. So it seems like quite a number of you, well, a handful of you have tried it before, probably have stopped using it. It seems like you've stopped using it. So I hope I can give you a little bit of more info here just to help you understand the Pitchfork trading strategies, Pitchfork indicator and trading strategies. I'll also highlight a lot of the difficulties with it, like you guys probably have experienced already. So give you the complete picture of how to use it, what to avoid, what to think about. All right. Let's see, I'll give it a minute more and we'll get started. I see a lot of you have joined early, nice and early, so super happy about that. I prefer it as the lines are more angled, so more dynamic than horizontal support resistance lines. It is more dynamic, but sometimes when you have too much dynamism, if that's a word, gets a little bit subjective as well, right? All right, so are we ready to get started? Should we get going? Let me know if you're ready. I see everyone's here and almost everyone's here and paying attention, so good stuff. Okay. Hey Kelvin, good to see you again. Hey Anne-Marie, how are you doing? Good morning, good afternoon, good evening. All right. Okay, so let's get started here. Again, welcome everyone. We are here with the IC Markets webinar trading strategy series. We are today looking at the Pitchfork trading strategies. So I'll be sharing with you how to draw the Pitchfork using the indicator, how to analyze it, what it means, how you could use it in terms of applying it to a trading setup, right? How to enter a trade, So with that, at any point in time, if you do have questions, please put it into the chat. Let me know. Almost immediately, I am looking at the chat as well, so I'll be happy to help you through those questions as we come along. All right. As usual, before we jump further on, any information contained in this webinar should not be construed as advice. It is presented as educational material only. International Capital Markets Private Limited has not considered your objectives, financial situation, and needs, and you should consider its appropriateness to your circumstances. The contents of this webinar and any accompanying material are not intended to be a solicitation of funds or a recommendation to trade a financial product. All right, so today we are going through the Pitchfork indicator and trading strategies. I don't think I'll be looking at too much trade setups or live trade setups, but if I do, and if you do jump into any trades, whether using the Pitchfork or whether it's based on anything we might cover today, please make sure you do your due diligence, check your analysis, make sure you're comfortable with that way of trading. Make sure you're not over trading. Leverage and margin, super important. Make sure you have that under control. All right. So a couple of things to get through. First one, what is the Pitchfork? Right, what's the Pitchfork indicator? How is it used in trading? Okay, how is it used in trading? It's an indicator, so I tend to harp on about the idea that as an indicator, you don't want to use it alone, right? It should not tell you exactly whether to buy or sell, but it should give you a bit of it should interpret the price movements and give you an indication, right? I always look at it as indicators, giving an indication whether to buy or sell. It's not a hard and fast rule that, you know, when you look at it, you should definitely buy, or once it crosses a level, definitely sell, right? Give you the indication, then to help you build the analysis to decide further whether to buy or to sell. Point number 3, how you can improve of it. I will be sharing with you some levels or some points of consideration where the Pitchfork, as you guys have already said, you know, it is a little bit subjective. There is a little bit of, it's more dynamic, so it's going to depend on how you draw that Pitchfork to make it work. So there are ways to, or things to consider to improve of it. And then after that, we'll craft a trading strategy to apply to, you know, that you could look into testing it out. Okay, hey Jamilu, how are you doing? So again, you know, as we go through these series of educational material, indicators and trading strategies, what I always would like you guys to do is, you know, test it out. Right? You learn the session, you go through a session today, you find out more information. Please don't apply it straight onto your live trading account. Okay, test it out on a demo account, back test it, understand how it works a lot more. Right, and again, if you have any questions as you go through, not just today, but as you go through your trading journey, reach out, let me know. Let me see how I can help you tweak it or help you understand it better so that you could apply it towards your long-term trading strategy. All right. Hey Fabio, hope you're well. Again, introducing your host. I always laugh when we come to this slide, is because I recognize almost all the names. I think 90% of the names here. So you guys know me already. My name is Jin Dao. Everyone here calls me Jin or JD, like Kelvin there. I am one of the investment analysts here at the Everest Fortune Group. I have previously managed a multi-million-dollar FX fund. I've been trading for more than 10 years or close to 15 already. So, you know, if you do have any questions about trading in particular, reach out, let me know. I'll be happy to share with you my views. It might not always be the right view, but I'll be happy to share with you my views about markets, possible trade setups, and what could happen. All right. So jumping straight into it, what is the Pitchfork? I think in terms of an indicator, it's probably not foreign to most of you, right? What I mean by it's not foreign to most of you, you probably have heard of it before. You have seen some examples of it. right? What I mean by some examples of it, if you've seen probably some variations of a pitchfork, or you've read analysis that has the pitchfork drawn. And very simply, I mean, as the name suggests, oops, how do I get this? There we go. As the name suggests, the pitchfork, I mean, we all know how the pitchfork works or looks like is that, right? The devil's pitchfork, or it looks like a fork. 3 prongs, 3 lines. In the trading sense, it almost never points straight up. It does tend to look, oops, I can't draw a straight line, but it tends to look like that, or in the other sense, pointing towards the downside like that. Okay, so the pitchfork with the 3 prongs, basically what it tells you is that it's 3 lines. So I'll jump it around a bit here. It's 3 lines made up of the median line, the upper trend line, and the lower trend line. Right? Notice how I use the words trend line. So it really tells you trend, right? It gives you a bit of an idea of the trend. It creates a trend channel, right? And like Marzena has indicated as well, it does provide you with a more dynamic levels of the support and resistance. Okay, so what we can see is when we have a big pitch, I'll draw a big one here like that. Okay, so the median line, the middle line, that's the first one here is number 1, right? In this case, the upper trend line will be number 2 here. And then number 3, the lower trend line is at the bottom. No prizes. In this case, if you have guessed that the upper trend line is your resistance level, if your lower trend line is your support, and then that middle is that median line. But you can see that if price comes and trades within those levels, right? If I extend it out all the way, if it trades within those levels, it does give us a relatively clear view of a trend, right? A trend and a channel. What we know of channels traditionally is that it does have 2 lines, and then you have your price trading in between. In this case, it's just a wider line, a wider channel, and then you have that middle line in that median line in the middle. Okay, how you can trade this? I'm jumping a little bit ahead. I have the slides for that later, but you will be, because it's in the channel and it does have the trend line, you could be trading using the pitchfork to indicate to you trending scenarios. I can't write with the mouse, right? Trending scenarios or breakout levels. Breakout levels. So if I were to draw it out, it'd be looking to sell at the top, buy at the bottom, or if price breaks out of that support level, then you're looking to sell for it to go lower as it breaks out of the lower trend line, that lower dynamic support level. Okay, makes sense so far? All good? It's actually quite straightforward, based on the 3 lines, and you have to remember point 1, point 2 is here, and point 3 is there. Okay, before we go further on, what I want to check with you guys is, do you use more of TradingView or do you use more of the MT4? Which you use more of? All right, I see a good mix of TradingView and MT4. So what I'll do is I'll show it to you on TradingView. It is a lot easier to do on MT4, but I'll show it to you on TradingView. Okay. So how it looks like, this is the TradingView. What we do in this case, right? This is on the H4 time frame. This is dollar index on the H4 time frame. What you're looking for is 0.1. Okay, 0.1. 0.2, you're looking for pivot levels. So you have 0.2 here and then 0.3 here. Draw those levels and then that whole pitchfork appears. Okay. things to consider or things to remember is that price for this Pitchfork to be not saying that it works or it doesn't work, you know, for it to follow the rules is that you should see price testing that median line quite a bit. Okay, you should be testing that median line quite a bit. It shouldn't be that price is way outside of the median line. Then you know that the Pitchfork is, or you've not drawn the Pitchfork accurately. So you want price to be testing that line, okay, testing that line over and over again, and then you find your pivot levels, the high point and the low point. Common question I get is that, you know, what time frame can this be applied on? It can be applied on all time frames. So I have this on the H4 here, right? I'll just clear out the lines for now just to show you something. You can see that I have it on the H4, right? How would you draw it? When would you draw it? You could draw it at any point. You could draw it as it has a small level, not really a pivot level there, but you could look for the high and then the next pivot level towards the downside. So in this case, I have it here and here. Okay, so moving forward from here, what happens is that you could be looking trending towards the upside. If it breaks above that, if it bounces off the resistance level, I'll be looking to sell it down. If it bounces off the support level, I'll be looking to buy it up. Okay, so in this case, it came down, didn't close below the candle, didn't close below the trend line. And you know, I always like for it to close, right? So it didn't close, bounce back up. You could be looking to buy it back up. Tested here, so tested here and tested here. You could be looking to sell it down. Okay. Then in this case, it broke below, or it broke that trend line, came very strongly towards the downside, and then continued down. So this is where you would say that once it's broken that trend line, once it's broken that trend line, then you would say, or broken that trend line strongly, then you would say that that Pitchfork indicator is invalid, right? You would go on and delete that Pitchfork. What I always would suggest is you do want to use it and then delete it after that, because if you don't delete it, then your chart becomes superbly messy after that. Okay, Steph, yes, you can sell at the median line, so you can be looking for it to hit and then turn back down to sell down, or if it breaks above that median line, you could be looking to buy it towards the upside. Again, what I would suggest is to remember, as you trade it, you want to be more trend following, right? You want to be really clear about the methodology that you're trading. So how I would be looking at this is that because it has been moving towards the upside, right? Because it has been moving towards the upside, I wouldn't be looking to sell it so much. I'll be looking more for buying opportunities. So you would have that point. I'll see that it comes down, supported by the trend line. Sure thing. Let me just try that. Okay, so when I have a pointer, I'll just tend to draw it out, okay? So there we go, better. Okay, so I will be looking for this point here as it gets supported by the trend line. Then I'll look to buy it up. All right, I'll look to buy it up. As Steph was saying, you know, if it breaks above, so I'll look to buy it up, might close off at that median line, and then as it breaks above that median line, I'll look to buy it up towards the next trend line, towards the upper trend line. If it does break above the upper trend line, fantastic. I'll be happy to buy it up even more. Then if it comes down and breaks that lower trend line, I would have to understand, or you would have to understand, that it would be a counter trend trade, right? It would be a counter trend trade. Could work 30% of the time, fails 70% of the time with the counter trend. I'm pretty sure this is with a news release as well. That's why we see that big drop. Okay, so if you tried to sell as it breaks that level, you would have lost as it pushed towards the upside. So this is on H4 time frame. It works as well on the, why can't I scroll? Hang on. Okay, it works as well on the H1 time frame. You can see again price testing those levels right in the middle. Okay, Marzena, if you can't see my cursor, I'm actually drawing levels down. So once I draw a level, you'll be able to see the lines there. All right. So you can test those. You see that price has tested the median line, and that's why I would say that this is a valid pitchfork. This is on a US yen on the H1 time frame. I just drew this before the session. Just wanted to have a bit of a live, almost live chart as we came up. So I had level 1 here, starting point towards that pivot level. You can see that it's bounced off, so it's a pivot level. And then level 2 here, another pivot level on the upside, came down. You could have a pivot level here, but I drew it here because this is the most recent one. Okay, so with this, with all this drawn now, I mean, if don't check your live charts right now, okay? I'm not sure what price is doing, but if we look at this, what we're anticipating is for the US yen on the H1 time frame to test, to respect that trend line and to bounce towards the upside, right? To bounce towards the upside. If it does turn down and break that level, then we'll be looking to sell down. Overall, what you see is in the shorter term, it's slightly towards the upside, but we know that this is the US yen. It has been dropping from that 145 level all the way down. So this will be a bit of a resumption of the trend towards the downside if it breaks that trend line. Okay, so if it bounces off, respects the trend line, we'll be looking to buy towards the median line or up towards the top of the channel or top of the upper trend line. If it doesn't and it turns down, then we'll be looking to sell as it breaks that lower trend line. So far, so good. Anyone's completely lost or makes sense so far? Okay. And then this is on the 15 minutes. Okay, this is on the 15-minute. Again, yeah, so we draw it week to week. You don't have to draw it week to week. You can do body to body. What I would suggest is, keep it consistent. So you don't want to be, in this case, for example, you don't want to draw it to the wick here and then draw it to the body here, and then after that, draw it to the body here. Okay, so try and keep it a bit consistent. Either you keep it all to the wicks or you keep it all to the bodies. But what I would also highlight is that, if you remember, when we talk about support and resistance levels, right? We talk about support and resistance levels. We don't want to consider that one line, right? We don't want to consider that one price. So you don't want to just be so fixated on that fine price level. In this case, I've missed off that little bit there. Near enough is good enough, right? That's how I would draw my support levels, my resistance levels, or indicators that I would have to draw. I would say near enough is good enough because it gives me just that idea of what's happening in terms of price. Okay, so I lost my train of thought. What I was going to say. Okay, so you can see here on the M15, price is not exactly on that median trend line, right? It's not exactly on the median trend line. We have it deviating down, but it does come back up to test a little bit, and then it deviates quite a little bit. So just be, that as we all know, when you draw something on the longer time frame, it's always going to be stronger than on the smaller time frame because it does get a little bit noisier on the smaller time frame. Okay, and then one more point to note is, unfortunately, for a pitchfork, it's not an automated indicator. It's not an indicator that draws by itself like the moving average or the MACD or the Bollinger Bands, that kind of stuff. It doesn't draw by itself. It's something that you do have to identify the levels and then draw as you analyze it. Okay, so it's not something that the thing appears as is being drawn. I do know that there are some indicators or some scripts on TradingView that does draw the pitchfork for you, but from my testing, I've seen that it doesn't really draw. No, it just draws based on the most recent pivot levels. So it can look quite distorted once, if it's drawn automatically just based on pivot levels. So, I would avoid doing that. I would say draw it out. At least you would trust it more, you understand it more that way. Okay, so can do it on H4, can do it on the H1, can do it on the M15. From how I've tested it on the daily, it's possible, but again, most of you are retail traders, part-time traders, so you're probably not going to trade solely on the daily time frame. It does provide quite a wide range, so I would say avoid doing it on the daily time frame. H4, H1, and if you really have to, M15 works perfect. Okay, so with that about the pitchfork, how to draw it, actually in the later stage, I will actually do a couple of live examples for you on how to draw the pitchfork on TradingView. How do we use it? Okay, so you know how to draw it. It's 3 lines. It's a level. Fabio, have you read my slides already? All right, I will show it to you with the Fibonacci levels as well. All right, so how do you use it in terms of the trades? 2 ways, 2 very clear ways. Is one, trading with the trend. All right, trading with the trend. Basically, what you'll be doing is you'll be anticipating for price to break, to remain within the channel. Right, to remain within the channel. Quite simply, you're looking to buy, anticipating that it'll bounce off the bottom, and then you'll be looking to sell as it bounces from the top. Right, so very clearly, it just looks like, we've drawn it a couple of times now already. As price comes down towards the bottom, you'll be looking to buy, and it goes up to the top, you'll be looking to sell. Okay, and then like Steph was indicating, can you trade as it reacts to that median line? Yeah, for sure. That I would consider that as a more aggressive entry. Right? Why I say a more aggressive entry is because once it comes into the middle, into that middle line, it becomes a little bit more variable. Okay, I'll scroll back up one again, couple. As you can see that in the middle line, it can test, it can reject, it can bounce around. In these examples here, I'll scroll back one more again. You can see that, oh, it can just stay right on that line. So I wouldn't suggest it too much. All right, I would say very often I would wait for it to react off the lower trend line or the higher trend line, getting into a trade. If I've missed that move, I've missed a move. I wouldn't try and jump in as it moves towards that median line. Okay. How is this compared to the Bollinger Bands? Bollinger Bands, one thing is that it draws by itself as price moves. Bollinger Band does tend to have a smaller variation. Okay, Bollinger Band tends to have a smaller standard deviation. So it draws based on how price is moving, based on a 20 moving average, typically. So it does have a smaller variation compared to the pitchfork. And also remember, sorry, the pitchfork acts more like a trend channel, or acts more like a support and resistance line more than the Bollinger Bands that give you that short term, that as price moves, that constraints as price is moving. Okay, so how to use it again? Trending scenario, looking to buy or looking to sell. So what we're looking for in this case, this is the US yen on the M15 time frame. I hope you guys were trading this. I was actually trading the yen just before this session. I actually saw that it was breaking out from, I didn't use the Pitchfork at that time, but I saw that it was breaking out of that consolidation, right? So I traded that towards the downside. Okay, unfortunately I got out at that level there. Okay, I saw that as an interim support level on a smaller time frame, so I got out at about that 139.60. If I'm not wrong, I got out at 139.60 level, so that drop and I got out. But hey, if I had the Pitchfork, then you would say that as it rejected, okay, so I'll clear out the lines again, as it rejected that trend line, that upper trend line here, you can see that it tested, rejected, tested, rejected. Now, if you're looking to sell as it breaks out of that near-term consolidation, your stop loss could be up above. Okay, to be to sell, your stop loss will be up above that trend line. The take profit in this case will be towards that bottom of that trend line, the bottom trend line there. Okay, so I'll be looking for that move. It works in addition to your current trading strategy. If I had it, then I would say that with that move, with that bottom trend line, I might not have gotten out of my trade just based on this level. I would have held on, look for it to test my support level or my stop loss level and that downward trend line. I could have gotten out at that 139.20 level, making myself an extra 40 pips towards the downside. Okay, so it does help using the Pitchfork, not just for entries. In addition to your own trading strategy, it adds on to possibly helping you maximize on trades a little bit as well. Okay, then the flip side is that if you look at it, it comes down close, very close to that bottom trend line area, looks to bounce. You see a rejection. You could be, if again, more aggressive because we know that the yen has been trading towards the downside. So this is a counter trend trade. You could say that, hey, can I be looking to buy this up? All right, I wouldn't suggest to buy it up to just to that trend, the middle line, right? Quite a tight level, but you could be looking for a rejection of the lower level. If you did look to buy, your stop loss will be below there, and then your take profit will be up towards that upper trend line, the upper trend line there. Okay, so in this case, good example, or quite a live example, that we had the US yen selling down because of a rejection, a turning down, a reversal from the upper trend line towards the downside. Fortunately, I got out at that point. And then if you didn't, you could have it to test the take profit towards the downside. Good, makes sense? Okay, all good, someone let me know. Fantastic, thanks Bia, thanks Simon, thanks Desiree. Just wanted to make sure. All right, then the higher risk, right? We had the aggressive, but this is a higher risk method. The way to apply this is trading the breakout, right? Trading the breakout. Again, I'll do my rough drawing there, right? What you're looking for is for price to break out of that trend line, either to the upside or break towards the downside of that trend line. You're looking for that breakout. And you all know, right? You're all experienced traders. You know that with breakouts, it does have, it is higher volatility, right? It is a higher volatility move because quite often we could see it break out and then next moment it comes back in, right? Or it breaks out and then it just continues towards the upside. You have missed the move, you might end up getting in too late. Okay, so having those trend lines there, you could, if it comes close, or if you anticipate a possible higher volatility move, you could have, in this case, we do the pitchfork again, right? As price comes, possibly trades near the upper resistance level, you anticipate a news coming out or you anticipate a breakout as it comes to a level, you could be applying a market order, right? For example, in this case, it would be a buy stop. It could be identifies levels for you to apply orders towards, so that you really catch the moves. Okay, because typically what we would say is that you look for breakouts when price is moving in a horizontal fashion, then you'd be placing your buy orders there, right? But if it's in a trending scenario towards upside, then applying the buy order might be a little bit more subjective. Okay, Rosanna, yes, I will be drawing a couple of examples onto a live price action slightly later on. All right. So how do we look for a breakout? Okay, this is a very nice example here. I forgot which chart this is. I think this is the Aussie dollar. We have it pushing towards the upside. So this is number 1, this is number 2, and this is number 3. All right. So you can see in this case, 1, 2, 3 is there. Price tested, well, came close, tested, rejected towards the downside, tested here, pushed back up, right? And then after that, as it came down, it broke out of that trend line, right? Broke out of that lower trend line. In this case, you could be looking to sell it down. Okay, let me go through this slide. Let me see. Let me go through this slide, and then after that, I'll jump onto the live charts to show you guys straight away. Okay. So in this case, looking to trade that breakout, we're looking for it to break out of that trend line towards the downside. Okay, so we'll be looking in this case, if you had your order there, well, wouldn't be a diagonal level. If your sell order there, you enter and then you get in. Typically take profit levels. I'll show you take profit and stop loss. Then we'll jump into the examples. So your stop loss levels, same chart will be if I look to sell, if I sold either there with an order or I entered a trade to sell there, my stop loss will be back within above that trend line. Take profit, right? Theoretically and based on the textbook, take profit, you would always have it at your level 3, right? So you have your take profit level at level 3, and then you would want the price to come back down. Okay, again, take profit is there to catch that big move, right? To catch that big move. How I would adjust this, or how I apply a bit of finesse to this, is that you also want to pay attention to other interim levels. You can see an interim level there, so you could be getting out a bit earlier, closing out half the position, and then letting the other half run. Or as it comes down towards the interim level, you could be moving your stop loss to break even or to secure some profits, and then looking for price to hit lower again. Okay. Don't know why I have this chart here. So again, this is the bouncing off of the level. I went through this example already. As it trades within the trend, you would have this breaking out of this level. You'd be looking to sell there. Stop loss. Again, take profit would either be, could be your level 2 or towards the bottom of, oops, not level 3 there, towards the bottom of your channel. So when you are trading within the range, right? If you're trading in a scenario within the range, then you would have your take profit towards the bottom or the top of the channel. If you're looking for a breakout, then you'll be looking for a take profit at your level 3 or your level 2. Okay, so now let me just jump quickly to the charts just to show you an example. Okay, messy charts. This is gold. I haven't looked at this yet. This is on the H4 time frame. Take this away for now. Okay, so how do you look for the Pitchfork? Is you go into here. Oh no, wait here. You go into the menu here, and then you can find a Pitchfork. Okay, so how you do this is you find the bottom point. You find the bottom, go straight to the next high. In this case, we're moving towards the upside, so you're looking for next high, and then to the next low point. Okay, so let me just adjust this a little bit so it's easier to see. All right, so you have that as your pitchfork towards the upside. So again, what I'll highlight to you guys is that, like we've been saying, it's really subjective. It could move depending on how you draw your lines, because if you drew it just based on that green level, it's there. If you drew it a little bit, it does tweak a little bit. Okay, if you do draw it to the body, it goes a little bit differently as well. So there we have it. That's gold on the H4. You can see that it respects this level, breaks towards the upside, comes down, tests that level, looks to break out. Again, breakout strategy, a bit higher risk or a lot higher risk, comes back in, trades within that area, looks to break out, and then pushes up again. Okay, what you could again be doing here, so far so good, everyone, all good? What you could be doing here again is that, what I want to remind you is that if you did this, all right, and then you can see that, you know, if you wanted to draw another one and you don't delete your previous pitchfork, what will happen is you do that bottom to this one again, then you end up with too many lines. You end up with too many lines, it gets super confusing. So just remember, clear it out. Once it's broken or it's a bit invalid, you can clear it out. Okay. Oh, and one more thing is that why it's not a hard and fast rule is because if you did that, you'll see that as much as it's outside, just remember what the trend is, how it's been moving. So it's not a hard and fast. Once it breaks that line, you have to sell. All right, because it does break, it does come back in. It does break, it comes because it's still following the trend. I'm still looking for that trending scenario. So that's the H4 time frame. If we did it on the H1, okay, this will make it a little bit messier, because if you just did this, right? So one of the slides later I will share with you is it's actually not very different. It's not very different from shift, right? You can actually, what happens is you typically draw a pitchfork, and then after that you adjust it to make it work along with the shift as well, or similar to the shift as well. Okay, if you ask me what's the shift, we should possibly do another session with the shift, about shift. Okay, so you see here, this will be a bad example. Okay, this is a bad example of drawing a pitchfork. Any idea why? Can you let me know why is this a bad example of the pitchfork? Let's see if you guys have been paying attention. Any idea why? He isn't touching it first. Yeah, okay. Exactly, good one, Fabio and Marzena, right? So you can see that price, nowhere near that median line. Right, we have some over there, but not a lot of prices near that median line. So it's not a great example of how to draw the pitchfork. Okay, so alternatively, what you could be looking at is something like that. Okay, badly drawn, but something like that. You can see that it's come down, it's tested a few times. We've got a high, so this is the 1, 2, and 3, and we have price testing and respecting those levels there. Okay, one thing I would say is try not to draw a pitchfork that spans on for too long, right? That spans on for too long. So you wouldn't want to do something like that. Okay, because why? Somewhat works, but somewhat doesn't work as well, and then you have a lot of false signals because it does break and comes back in, breaks and comes back in. It becomes too it takes too much what do I say, there are a lot of things that has happened in between this move, news events, big events, that price action and rejection of levels. So you don't want to draw it for too long a time frame or too long a period. Well, I do find that it works quite well when you look at it in a more reasonable time frame like that, or more reasonable period. You can see that it reacts quite well to those levels. All right, so I hope I answered your question there, Marzena and Desiree, about how to draw the pitchfork. Let's jump back into this. I lost my slides. Let me do that. Okay. I don't have the MT4 on this, Kelvin. So MT4 is a lot easier. What you have to do is you go in, identify point 1, point 2, or point 2 here and point 3 there, and then it draws it out for you. So a lot easier to draw an MT4. You just have to identify the 3 points, and it draws your pitchfork out for you. All right. So how do you improve on the pitchfork? As I've said this over through the whole session already. Different pivot point levels are going to give you different angles, so you could have different results. Right, we went through those examples on the charts as it happens. Right, just to show you here, same chart, just drawing it at a little bit different angle. Right, so you can see that we've done it here, next we've done it here, just a little bit of different angle shifts that pitchfork just a little bit. Not a big difference, but if you're identifying just that round number level or just that specific price level, it can shift your price a little bit or your entry levels a little bit. So, and also, like we just did an example, if you, especially point 1, if you move that point 1, if you tweak it towards upside or downside, you're going to see a big change in that pitchfork. Okay, what I'll show you here as well is I need to do this a little bit quickly. I want to show you the example. Where is it? Okay, of the pitchfork. So there's an auto pitchfork here. Okay, so I'll take that away. So the auto pitchfork drew this instead because of those pivot levels, and you can see that straight away it's incorrect. It doesn't work. So just be extra careful if you're trying to use this as an auto level. Must be harder to draw a pitchfork near reversal, so it's quite a lagging indicator. It's actually, I have an example there. Okay, so the NZD USD, take that away. Right, so you have that push towards upside. It was at a resistance level at about there. We had it testing. So what you could be looking for in this case is that move, right? It does come back in towards that area. So it's not, I don't think it's any particularly easier or harder thing to do at a resistance level. But what I would say that it's not really a lagging indicator. It's because it's a trend line. It's two trend lines and a median line. So it just gives you a bit of that boundary, right? Like your support resistance. So it's not really an automated and hence lagging indicator per se. All right, let's get through this. So crafting a trading strategy, right? Again, you guys have been through many sessions already. Never use it alone, right? Never use it alone. What you can do, apply the pitchfork, draw the pitchfork. Make sure you have your levels 1, 2, and 3. You can use it with the Ichimoku cloud, right? Use it with the Ichimoku cloud as it tests that resistance or the upper trend line. You're looking to sell. You see the cloud towards the downside. You could be looking add on the info, right? As it tests that bottom area, you can see an upward cloud, right? A bullish cloud towards gives you again the indication that we might see that bounce, short-term bounce, because overall trend might still be towards the downside. So that's applying a slightly different kind of analysis, price action analysis to your trades. So you have your pitchfork, bit of a dynamic support, resistance level, trending indicator together with the Ichimoku. Alternatively, and you can see that it's broken below the cloud, so you can see that big push towards the downside. One other one that I applied to, is I have my support and resistance levels, right? Those yellow lines there. So I'm looking at it adding confluence, right? Adding confluence because now I have that downward trend line here, but I have a good swing level. So I know that this is going to be a relatively strong support level, right? And it does play out quite nicely. Price came down very close to that downward trend line, very close to that support level, and then we saw price bounce back up. Right, it came back up straight towards that 139.68 level, tested that point, and then could be reversing back down now. Median line, because we have that median line, a bit of a resistance level, and also that horizontal resistance level. Okay, so for me, I would apply it to the pitchfork to the support and resistance level just to add a little bit more of the analysis to it. Okay, I wouldn't always draw a pitchfork. I do tend to draw it to add on to identify possible levels, right? But not, I wouldn't draw it all the time on my charts, just because I don't really want it too messy either. All right. And then I think Steph asked, adding the Fibonacci levels to this. In this case, what you can also see is that as we identify that two levels, right? You can also see that this is your point 1, 2, and 3. Okay, so you can see that your point 2 also works very well with that 61.8 fib level, right? Trading towards breaking that level, and also at that median line there. And you can see sometimes that it actually coincides quite well with your trend lines, right? The fib levels coincide quite well with your trend lines. 78.6 actually test, and it's within that area there. I would pay attention more towards that key level instead, right? I wouldn't do all the levels. Okay, I would be paying attention to the key levels. But another way to use this is also you have your pitchfork there. You apply your Fibonacci level just to help you also identify where to get into a trade. Because what happens is, and very commonly, is that you would have done their fib level, you would have done your pitchfork there, you would have turned on your, well, when you turn on your charts, you do all your analysis, and then you realize, oh wait, price is right here, right? It hasn't, you've missed the reaction to that upper trend line. Is it too early or too late to get into a trade? Then I would say, you know, you would have your fib levels there. You would consider, once it breaks that point, can you look to sell it down? Right? Can you look to sell it down? And then you might consider at that 61.8 level here, would you want to close out half the trade, move your stop loss down, you know, manage your trade from that sense. Then after that, the next level at that trend line support, or we know already that horizontal support level, and also your fib level forming a good support area at about that 139.20 price level. All right. So again, remember, Pitchfork works. It helps you identify a bit of an entry level, but I like it for the sense that it helps you identify possible or maybe a bit of an extended take profit level. Okay, but the cons is that it becomes very subjective. Right, let me take this away. It becomes very subjective in the sense that, you know, if we start drawing, where was the US yen? Right, so this is the US yen on the H1 time frame. If we start drawing the pitchfork like that, you know, and a lot of times what happens with a lot of retail traders or new traders who wants to apply the pitchfork, they actually end up trying to make it work, right? So they'll start drawing, go, oh wait, this doesn't work, I'll draw it down to this point, I'll extend this over, right, just to make it work. Then you end up making the indicator work for you rather than let it tell you what is actually going to happen, right? So just remember, a bit more subjective, be extra careful when you use it. This could actually be a little bit of a good setup in this case on the H1 time frame, pushing up. You can see it test a couple of times, pivot level there to the top and then to the bottom. You can see that price tried to break, could be tracing back up. On the M15 time frame, if I clear it out, you can see that if you did this, I wouldn't recommend, but if you did this, right, then you would think that it's going to break towards the downside, but remember, this is on the M15 time frame, not on, so it becomes a bit noisy. We do have a very key support level very close by at the at about that point there. Okay, so I would still always have my horizontal levels in place. I would have my fib levels in place, all my fib levels in place. Then you use your pitchfork just to give you the additional idea of where price could be trading towards. Okay, I think this one was quite a nice setup. We're looking at that. Right, so this is a US yen on the M15 time frame, trending lower. We can see that it's tested this median line quite well with a 0.2 there, or 0.1 up there, and then you can see price came down very close to that trend line. Looks like it might be coming back up to test again that median line. All right, so with that, any questions? I ran on a little bit longer than I expected, but any questions? And if you have no questions, would this be something that you would start trying to apply to your trading strategies? You're most welcome, Jamilu. Good stuff, Stephen. It is basically a channel. It is a little bit more of a dynamic, a little bit more of a sensitive and subjective channel. So, you know, if you were to ask me, I would say, you know, use a channel or use a pitchfork. I would say start off with the channel. If you find that it's not suitable to what you would want to do, then you could try the pitchfork. But I'd say, you know, for most beginners starting off, or even into the intermediate, stay with the channel, possibly a good idea. Alrighty, most welcome, and no worries, Samuel. Thank you, Kelvin. Thanks for that, Bob. Test it out, Fabio, and let me know how it goes. You're most welcome there, Simon. Thanks, Kelvin. Most welcome, Alan. Alrighty, take care now. Trade well, trade safe, and reach out. Let me know if you've got any questions. Take care now. Bye-bye. See ya.